CenterPoint can provide balance sheets using book value, fair market value, or cash value. A cash value balance sheet coordinates with your tax return. In this session, we're going to step through establishing modified cash balances, and that begins with a user-defined report. The user-defined report defines the activity being reported for tax purposes. All accounts need to be assigned to a line on the report, and different transaction types need to be assigned in columns for your representation of the data for tax purposes. For example, the different transaction types are cash expenses, cash receipts, paid payables, received receivables, general journal cash accrual, general journal accrual, and so on. On some rows, the transaction types will be different than other rows. So for example, on utilities expense row, you would have transaction types of cash activity for cash expenses or paid payables, or perhaps general journal cash accrual, but you wouldn't want to include general journal accrual. Whereas if you had a row that was depreciation expense, you would include general journal accrual, and it wouldn't need the other types of activity. In addition, the rows marked transactions in this row are taxable will be included on the cash income statement. Each row has that checkbox, and if it's not checked, then that activity is posted to the cash balance sheet. Now let's go take a look at a user-defined report. User-defined reports are maintained under Setup, User-Defined Tax Reports. And your system came with a 1040 Schedule F or perhaps a Schedule C. And if you need to add a Schedule C or vice versa, you can always click the Tax Reports button and select that particular form and add that to your list. When we look at one of these user-defined reports, we first see in the rows a list of all of the different row titles. Each one of these row titles is representing what type of data is getting collected in that row, which accounts are in that data. Or if it's a red row, it's a calculated row, and that's doing calculations for you in that report. It additionally has this checkbox we talked about if transactions in this row are taxable. If we're on a row that is a taxable row and it would be on an income statement, it will have a checkbox. And if it isn't, if it's on a row that is not on an income statement, then it won't have a check mark in that box. Now let's go to the columns, and the columns identify the different transaction types that you want to include. So in cash, if we look at the different types that are included in the cash column, we'll scroll down and we see checked will be bank transfer, line of credit receipt, cash receipt, credit card purchase, and line of credit expense and expense. So each one of these rows are identifying different types of activity that are included. And additionally, each one of these columns are identifying which rows want to pick up that type of activity. So if we look at cash, all of the rows are selected. Payment and receipts, which is paid payables and received receivables, all the rows are selected. But if we look at general journal accrual, there's only a couple of rows selected because we don't want that type of activity most of the time. We have a cost of livestock for resale selected and depreciation. And then in the account assignment is where all of your account categories and accounts are assigned to the row that represents that type of data. So if we expand any one of these rows, like freight and trucking, we see the account that is assigned in that particular row. It might be just one account, or it could be an account where there's several different categories and accounts assigned. And again, this report has been set up for you, but you can make a copy of this report and make modifications if you need a different representation. For example, if you needed to report taxes on more of an accrual basis than a cash basis, then you would be making some modifications. So that's the user-defined report and the job that it has. And now we're going to go up to Setup and Companies, and that is where we define to turn on modified cash balances. So we're going to edit our company, go to the Tax Report tab, and we need to select that user-defined report that we're using to report taxes to represent our tax reporting activity. And then down at the bottom, we want to check the box that we want to calculate modified cash balances. And now we can establish what period we want to use for a beginning period for modified cash balances. That can be the very beginning first period of your database, or if you don't want to go back that far, you can select a different period, like the last month of the previous year. We're going to leave it at the first period of this database, and that's all you need to do at this time. We're going to save that. And next we have to go establish our beginning balances for modified cash balances. So for that, you're going to go to Setup, and then Accounts, and Accounts again. Click on the Balances tab, select the company you want to work with, and we have to select the period that we selected under Companies for our beginning period of modified cash balances, which for this database was beginning period. So that went to December 2017. If you picked a different period, then you would pick that period here. And down at the bottom under Options are the different values you can change in the Balances tab, and Modified Cash Values is one of them. It will only let you change values in modified cash when you're in the beginning period that you defined. Now we can expand any one of these sections, and we'd be able to click in our modified cash cell and change that figure. And I'm just gonna, it's actually the right figure right now, but I'm gonna change this so you can see when I change a figure, my Save button becomes active. I'm gonna change this back again so it's right. Okay, and you can go right down the line and change whatever balances you need. If you're an agriculture database, raised crops won't have a modified cash balance. They're an accrual adjustment. Purchased livestock or purchased inventory would be anything that's purchased and not yet, the money hasn't received of the sale against any of those purchases. And if you have any work in process accounts or raw material accounts, they would have a zero modified cash because they're picked up as an expense at the time that you purchase it. So they show up on the income statement, not on the cash balance sheet. And then on down the line, so your assets will typically have the same cash value as the book value, as well as your loans. So once you get all those balances established in the beginning period, you're going to click Save. And then we need to repost those balances. So we're going to close out of the balances, go back to Companies, edit our company again, and go to the tax report, and now we can repost modified cash balances. So it's going to repost from our beginning balance, go through our activity of what we've entered, and update our modified cash balance. And when this is completed, we are ready to run our balance sheet for our modified cash balances. Our updating is completed, and now let's go run a balance sheet for cash value. So we can go to Reports, Reports again, and under Financial Statements, we'll just go ahead and run a balance sheet for book, market, and cash. And we'll select a period of, let's do February. And we have our company, and we're ready to preview that. And we have the book value that represents the undepreciated book value that coordinates with our transaction activity. We have a market value that represents marketable values, and so the value of inventory or fixed assets might be different than what they are for book. And then we have our cash value balances, which will coordinate with our tax return information. And from here on out, all of the transactions that you put in will automatically update the cash value just as it does the book value and the market value in your balance activity.